Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only, our capital that we manage is more than $3 million. Here you will find only the most useful. Thanks for subscribing. Also in the description is a links to verified exchangers, when you register on which, you get a welcome bonus from me. Let's get to the video. Friends, as promised, today we are going to look at what the Fed is preparing and what to expect from tomorrow's USA inflation data, and that, in fact, is the key event for the financial markets in January. I will also cover the latest news on fraud charges at Digital Currency Group and reserve problems at the top one crypto exchange, Binance. USA inflation data will be released tomorrow evening, but it is already having a key impact on both the USA stock market and the value of the first cryptocurrency. Here is, for example, what we saw yesterday during the speech of Fed Chairman Jerome Powell. Bitcoin was showing growth and reached $17,400. Let's go in order. First, the Fed decided to shoot down the markets for a possible positive, after last Friday's unemployment news, which also coincided with data on wage growth declines. As a result, the markets took this as a chance to beat inflation without a recession in the USA economy, but the Fed said it would still raise the resignation at least one more time at its February 1st meeting. Since Monday, the S&P 500 and Bitcoin have been trying to continue rising, but the Fed put the brakes on it again by talking about how the rate might rise more than it appears. But next, on Tuesday, the Lord of the printing press, Jerome Powell, spoke in person, and so his press conference turned out to be surprisingly pigeonholed. Just in case, let me briefly explain the terminology. The Fed's hawks are those who advocate a stricter monetary policy, and they are opposed by doves who believe the regulator can lead a softer policy. So, lately, almost all Fed officials have been hawks, especially Jerome Powell, and so, his latest speech really surprised. Here's what he said: price stability is the foundation of a healthy economy and brings immeasurable benefits to the public over time. But restoring price stability with high inflation may require measures that are not popular in the short term as we raise interest rates to slow the economy. This sentence maintains the Fed's policy of prioritizing the fight against inflation, even if it leads to problems in the economy and thereby makes Americans unhappy. That is, on the one hand, as if nothing has changed, but on the other hand, in this speech there were no such usual scares for the market as we are ready to raise the rate much more than 5%, that the Fed is ready to increase unemployment, and that the threat of recession will not make them move to soften the monetary policy. All in all, Powell was doing his best to cheer up the financial markets, and in the moment he did, we saw another small rise in the S&P 500, and Bitcoin began trading above $17,400. And if you think, and you really do, that stock prices in cryptocurrencies should have risen more in this situation, then you can direct all your indignation and complaints to JP Morgan and personally to its CEO Jamie Dimon. He gave his forecast, according to which the Fed may stop raising the rate after the February meeting, but in the second half of the year they will return to tightening the monetary policy, bringing the rate up to 6%. In Jamie Dimon's mind, there is no certainty that a 5% rate is enough for inflation in the USA to form a permanent trend towards the target of 2%, and if the Fed sees that inflation has stopped in one place, then they will have to raise the rate again, because the regulator, trivially, has no other tools for that purpose. And as a consequence, the issue of recession could become relevant again, only it will be postponed until the second half of the year. Let me remind you that banks only make forecasts so that their trading divisions can make money, and here and now, bankers are betting on both a decline in the S&P 500 and a continued fall in Bitcoin. So, we'd better focus on the exact numbers, and they'll be out tomorrow afternoon. The current forecast is for inflation to fall another 0.6% to 6.5%. How might markets react, depending on what the actual results turn out to be? The optimistic and moderate scenarios are that inflation will be stronger than expected, or it will work out, so the S&P 500 may try again to take the 4,000-point level, and it may not be far from breaking the major bearish trend it had been following all last year. but I do not expect that to happen because there are too many positive expectations in the stock price. Also, the reporting season starts at the end of this week, and it will not make investors happy, and most importantly, for the bulls to return, the Fed needs to stop quantitative tightening, that is, pulling liquidity from the markets and, at the very least, announcing that the ceiling in rate hikes has been reached. So, a little more positivity is very much a possibility, and maybe it will be enough to push Bitcoin back up to 18,000, although, here too, I would advise to be restrained. I wrote this morning in our channel and Telegram that Bitcoin is overbought and there is a bearish divergence in the relative strength index. This does not say that Bitcoin's local rise is over, but it does point to the possibility of a slight correction, the negative scenario, which almost no one considers right now, and because of that, the reaction could be as painful as possible if inflation declines worse than forecasted or stays in place altogether. Then we will get a sharp bearish reversal in stocks and cryptocurrencies because investors will suddenly remember the bad scenario from the Fed with long-term high inflation. Also importantly, tomorrow there will be more data on core inflation in the USA, which does not take into account food and energy prices. That is, they will give a clearer picture of price movements and their long-term dynamics. On Thursday and Friday, there will be comments from the Fed on inflation. They just don't want to frighten with another 50-point rate increase, because 80% of the market expects it to be no more than 25 points. Now you know what to expect from the Fed and inflation. As soon as this data comes out, I will post it on our Telegram channel. You can subscribe at the link just below the video. And to finish, two important news concerning cryptocurrencies, which also have their impact on the market. Crypto exchange Binance, which after the collapse of FTX has dominated the market, and today, it accounts for 92% of the spot market. In fact, it is now completely centralized. So, on Binance continues a stream of criticism from the world's leading media. A new Forbes estimated that in the last 60 days, the assets of the exchange decreased by $1,200 billion. Bloomberg raised the question of BUSD, which, according to their information, had a deficit of $1 billion at some moments. The presence of the problem was allegedly confirmed by representatives of Binance itself, indicating that it has been fully resolved and nothing like that happens anymore. Needless to say, what problems could be on the crypto market if something happens with Binance? I venture to guess that the stream of criticism against the exchange will continue, and it is BUSD that may become the center of further attacks. Let me remind that the USA and Europe intend to regulate stable coins in the first place. Recall another potentially loud and dangerous scam with 631,000 bitcoins from Grayscale Crypto Fund. Crypto exchange Gemini published open letter to Digital Currency Group, which is parent company of Grayscale. The exchange demanded their money back, calling the head of Digital Currency Group Barry Silbert a crook and calling him to resign. The crypto platform, Bitvavo, has added fuel to the fire by demanding €290 million in debt from the Digital Currency Group. They refused an offer to collect 70% of the debt in a few payments. According to Bitvavo, Digital Currency Group has enough money to pay back the debt in one payment. As I wrote in Telegram, this statement may be a hint at the 631,000 bitcoins on Grayscale's balance sheet. But if Digital Currency Group even tries to start selling from there, Bitvavo will get its due, but the whole crypto market will be in for a very bad time. This is what is happening right now. I will continue to keep you informed, so subscribe to the channel and like it if the video was useful for you. Thanks for watching, your Cryptanic.